and trade one closes in profit. The market doesn't owe you more gifts just because you nailed one entry. The trade closes in a loss. The win here isn't never taking losses. The win is not turning a loss into a meltdown. I'm not hunting the perfect moment. I'm using what the market already proved. Hey everyone, Aaron here. Today we're covering something really important that most people ignore until it's too late. What to do when the market suddenly stops following your scenario. Because here's the truth, trading isn't about always being right. It's about staying composed when you're wrong. That's the moment most people fall apart. They rush, they panic, they try to make it back, and they turn one normal loss into a chain of bad decisions. We're doing it differently today. I'll show you a short but very telling 1-minute series. First a clean entry, profit, then the second entry, loss, and then the most important part, how to calmly adjust and catch the move based on what's actually happening, not based on stubbornness. If you like this format, calm, straight to the point, with the logic explained, subscribe, hit like, and check my Telegram, link in the description. I share entry checklist, a daily notes template, and breakdowns that help you build a system without chaos. Let's go to the screen. All right, we're on the iFinex platform. We're using a candlestick chart. I always prefer candles because on short time frames, they give you the most honest read. Who's in control and where the string starts falling. First step, pick the pair. I open the asset list and choose AUD-CHF. Payout here is 95%. That's excellent for a series because with solid discipline, this kind of payout supports some math. Next, I set the chart interval to 1 minute. The 1-minute chart is pure discipline. You can't fill in the blanks. You have to wait for confirmation and act on facts. First trade amount $100. Trade number 1, entry off support. Look at the chart. Price reaches a strong support level. And what matters isn't the level itself, it's the reaction. I see the sell-off slowing down. Downside pressure isn't as aggressive, and candles stop pushing price lower at the same speed. Then we get the key detail, a small lower wick. A lower wick at support means something simple. Sellers tried to push below, but buyers stepped in, absorbed it, and price snapped back up. Sellers are losing strength, and buyers are starting to take control. Conditions match, support plus slowdown plus lower wick. I enter up with $100. Now we wait calmly. The key is not to interfere, no panic, no second guessing, no adding trades out of emotion. We made a decision based on clear logic, so let's let it play out. We're waiting for expiry, and trade 1 closes in profit. We're up $195. Great, but here's the important part. After a win, you can't get cocky. The market doesn't owe you more gifts just because you nailed one entry. So from here on, it's facts and price reaction only. Trade number 2, continuation attempt and a normal loss. Now I increase the amount to 150 and enter up again. At the moment of entry, it looked like the impulse might continue. After the bounce the market had, that we can keep going by. This is common. After a clean support reaction, you want to ride the move further. But watch what happens next, and this is the key lesson. The market behaves differently. Buyers can't hold control. The upside move weakens and price turns. The trade closes in a loss. And here's the main point. This is normal. The market doesn't have to follow every logical scenario. Losing trades are part of trading. The win here isn't never taking losses. The win is not turning a loss into a meltdown. In a lab, when an experiment doesn't confirm your hypothesis, you don't start dumping random chemicals into the beaker out of emotion. You log the results and adjust the conclusion. Trading is the same. So I do exactly that. No arguing, no anger, no speeding up. I check what the market is showing now, and I make the next move with a clear head. Trade number 3, flip with the market and entered down. After the loss, I recovered the same amount, $150, and entered down. Why down? Because the market confirms a new scenario. The upward move is clearly losing strength. Selling pressure shows up and price starts dropping with conviction. This isn't I think so, it's visible in the structure and candle reaction. Important, no rushing. I'm not clicking to get it back fast. I enter when the market shows that sellers are already in control. The trade runs smoothly, no nervous swings. Price continues the move in our direction, and the selling pressure looks real. Trade reaches expiry and closes in profit, up $292.50. And this highlights a principle many people underestimate. Don't try to guess the market, adapt to it. The market changed its behavior, so we change sides. No stubbornness, just cold logic. Trade number 4. Pressure holds, continuation down. Next, I increase the amount to 200 and enter down again. Here, the logic is even calmer. The market already confirmed direction. Seller pressure is there. The downside impulse developed without sharp pullbacks. Candles print confidently. That tells us sellers still have control. And continuation odds stay high. I'm not hunting the perfect moment. I'm using what the market already proved. Direction is clear, the move is readable, pullbacks are weak. So the idea is still valid. Trade comes to the close and finishes green. We're up $390. Series result. Total balance, plus $727.50. Here's what really happened. We took a solid support entry, then got a normal loss in the continuation attempt. And after that, we didn't break, didn't start gambling. We adjusted to the facts. And we caught the move where the market itself confirmed seller pressure. That's grown-up trading, not always green, but control stronger than emotion. Guys, remember this. Trading isn't guessing, it's waiting, reading, and making the right decision at the right time. That's where consistent trading comes from. The market respects patience, and patience isn't sitting and hoping. Patience is not entering without confirmation, not fighting the move, and not turning one loss into a chain of mistakes. Confidence always comes from experience and discipline, not adrenaline, not I feel it, but a repeatable process. See the conditions, enter, accept the outcome, take the lesson, keep going by the plan. If you want, I can share my short what to do after a loss checklist in Telegram, so you don't get pulled into emotion. Pause, check why you entered, assess momentum strength, and only then make the next decision. Link in the description. Subscribe, hit like, and I'll see you in the next iFinex breakdown.